welcome to my YouTube channel. So today we are going to learn when to go in for buy or when to go in for sell. You know, there is a lot of conferences, like people get to see a lot of things to go in the market, but most traders, mostly the beginners, they sometimes they get confused whereby which one is right, which one should I follow, and all of those stuff. So right here I'm going to teach you how to approach the forex market or the forex charts in a proper way. Yeah, so let's go straight to the charts, guys. All right, if you realize it well, if you learn in a chart like this here, you will see that we are having so many market structures. Let's say types of market structures. We are having this one, the ranging one. The ranging, it's when the market it is just bouncing from the resistance to the support. So most people, they be waiting for a break, mostly for a break either to the downside, a retest and a drop to the downside. But another thing is we are having another type of market structure, which is an uptrend market structure, whereby we are making higher highs and higher lows, higher highs and higher lows, higher high, higher lows, higher high, higher lows. So this is where we buy the market. But most of them, they tend to sell as they are buying, which is very wrong, and at the same time it can be right, whereby we are having high high, high lows, like swing lows and swing highs at maybe a daily time frame. Because if it is a daily time frame, that's a very big time frame to wait for the retracement to the downside so that you can buy. So again, we are having another market structure which is called a downtrend, and this is where we are making lower lows and lower high, lower low, lower high, lower low, lower high. So in this type of market structure, this is where we tend to sell the market. So if you want to sell from a downtrend, which means you will need to sell from the pullback. But the pullback, this is a lower high, which means if we are in a downtrend, we should sell at the lower high, isn't it? But let me show you the difference. You may find that most of the time when the market it is making a lower high, lower low, lower high, we don't really know when does this pullback end, because it can come here, it can come here, it can, it can pull back from anywhere. So right here I will teach you when to know that this market it is going to pull back from this point. That is it. So let me show you something. Let's assume we are in an uptrend. I wouldn't advise any beginner traders to be trading from a ranging market, because this ranging market, if I draw it, let's say if I draw this ranging market like this, that this is a ranging market, it's not always easy like as it is, like the way you can, when you search about ranging market structure, you will see something perfect like this. Of course, we should sell from the ceiling and buy from the floor, which is very, very unrealistic. Why am I saying so? I'm saying so because the price never be perfect like it is. You'll find that there is where the high is somewhere like here and somewhere like here. You find that the ranging market structure, it is the top market structure you can trade. So I would rather, if you're a new beginner, if you find any pair in a ranging structure, you better avoid it. We should trade at least when we are in an uptrend or when we are in a downtrend. And when do you know that the market it is an uptrend or in a downtrend? This is how you get to know. When the market is making a high, let's say high low, high low, high, this is an uptrend. And when it is making lower lows, obviously it is a downtrend. So you get to know that if we are in an uptrend, we buy from the pullback, which is here, isn't it? Which means another pullback is here. Then if we are in a downtrend, we sell at the pullback, which is here, and another pullback it is here. You see that? Very amazing. So this is where we put our positions, somewhere like here, stop loss around here, then we buy. Then we get another opportunity, we go in, we continue buying. Okay, now let's see in a downtrend. This is where we get our opportunity from somewhere like there, putting our take profit there and stop loss there, boom, go in for sell. Then another one. As soon like the way when you get that pullback opportunity, this is when you sell or when you buy when we are in an uptrend market structure. So how do we take opportunities? I will teach you when do you know that the pullback has just ended, because you can see that the pullback, it can usually end from here and go. It can either end like from here and go. Now for you, which means if you're not really professional enough, you may get stopped a couple of times, then the market will eventually go to your direction. You get. So you will start asking yourself, now what am I doing? Like, what am I doing wrong? Which is a serious question. Okay. Let me show you something. We use some of the technical analysis in order to predict the market, the pullback, and when the pullback should end. That is it. One of them, it is a Fibonacci level. Another one, it is Bollinger Bands. It can help you. Another thing, it is, you can use even support and resistance, which is pretty amazing. You get. There is moving averages. Like, they are very nice. They can predict and be like, okay, the trend, it has ended. Now it's time to continue trending to the upside, or the pullback has just ended. Now for this one, for the best technical analysis, let's say the best tool we should use, it is Fibonacci level. This tool, it's just amazing. I'm gonna show you it. I'm gonna show you from here to the live market, or to the charts plus the trades I took today with the team. Let's go to the charts. All right. Now when you watch around here, this is where what's happening. What's happening? All right. Oh, okay. Now you can watch that we use Fibonacci level. It's here. If you don't know how to set the Fibonacci level, the link is down. Just tap into the link, text me. I will reply you straight. Boom, from here to here. So you will find that most of the time, this market retraces to 50% of Fibonacci level. The 50% of Fib level plus and 61.8 Fib level, those are the golden zone. That's where the market normally bounce from. So these are the golden zones to trust. So which means every time when the market breaks the structure, we put our Fibonacci level from this point down here, which is the swing low, to the swing high, and wait for this retracement. Now, if you get this retracement, we don't just go in for buy. Let me show you. If this is a retracement, it should bounce most of the time from the previous resistance, using it as a support. Are you getting me here? Like this is a previous resistance which was broken, and it is being used as a support. At the same time, it is the 50% of Fibonacci level. I will show you this from the market. I mean, from the live market. Now, you will find that if this is the 4H time frame, or if this is the 1H time frame, you will find that there is, in a lower time frame, let's say the 15, there is some series of lower lows and lower high, lower low, lower high, lower low, lower high, lower low, lower high. And you will find that many retail traders are getting caught inside here. They are trying to sell when we are in an uptrend. As soon as somebody starts to sell, the market will manipulate a lot of people in this process of retracing to the downside. That's why whenever the market reaches this point here, it runs away non-stop. You get, it runs away non-stop. I'm telling you this. So this is one of the things that you should not, like, you shouldn't be selling when we are in an uptrend market structure. Because when do you know that we switch to the downside? This is when we break the previous higher low. If we break it, then that's when we confirm the downtrend. But if we are just playing around these zones, we don't execute unless if we break this low. If we break this, we wait for a retracement and continue buying. Now this is what happens in this period. Let's say this is we are having a series of lower lows and low highs in this column right here. So this is what happens. Let's say if this is the 4H. Now in 15 minutes, you will find something like this. Maybe 15 minutes, you will find there something like this. Lower low, lower high, lower low, lower low, lower, lower, lower. Now when we reach around here, let's say the 50% of Fibonacci level, don't just go in. Wait for something like this. As I told you, since we are breaking these lower lows on a lower time frame, which means the series of lower lows are still continuing. Now when do we switch for a buy? This is when we break the previous a lower high. If we break it like this is when we wait for a retracement to the downside and boom, buy. So this is where we put our trend line most of the time, something like this, and and buy from, and put some. There are some very many market structure shift patterns. Let's say the head and shoulders. I do teach them into my premium. So this is where we draw our trend line like this. We confirm a shift to the downs, to the upside, and boom, a retracement, then we go in for a buy. And this normally happens from all time frame. So you just need to choose at least 3 time frame to trust. Let's say the daily, the 4H, the 1H and 15, or the daily 1H and 15. Those are enough. Now let me show you something like that in a lower time, in a live market. You can see that we are having here some kind of lower low, lower high. The market failed to make a lower low, but it doesn't mean we go in for buy, because it can easily play around and take you down, right? So here we wait for a break of this lower high, isn't it? After breaking it, then we wait for a retracement to the downside. Where is the retracement? The retracement, it is here, just here at the support. You get, this was a resistance. You can see how many people were trying to sell from here. How many people were trying, because they saw that red candlestick. A lot. You get, but you can't fall for this, because you know what, we are in a downtrend. I will confirm the buys. I will confirm the sells once we break this low high. The real sell was around here, and another one should be just below here after breaking this lower low. So this is where we go in for buy. After breaking up, retracement to the downside, and boom, we catch and stop loss at a good area somewhere like there. So I want you guys to go and backtest this chart pattern, this strategy, and I want you to challenge yourself and be like, I will be executing only this kind of setup. It normally happens from the 15, 1H or time frame. You challenge yourself and be like, I'll be executing only this kind of setup.